Okay, all right. Morning, everyone. Welcome back to our morning cuppa at 8. I'm Joseph here. So looking at the Hang Seng this index over the week, right? It just fell below the 50 days moving average and having the bearish technical setup intact. Looking at the weekly, right? The price performance by different counters, all right? Can see that the SMIC, Zhongxin Guoqi, is the only counter that have a strong rebound among the big three counters. Then on Lenovo also went up by 17%, right? The rest of the stocks are mainly went below in the negative territory, right? And over the week, we have a few news that I want to keep you guys update. Firstly, Donald Trump have make a call with the Gulf countries leaders, and he mentions that there will be a deals with the Iran soon. And also over the weekend, I read that the one of the news saying that the Iran is going to open up the Strait of Hormuz to the pre-war level within 30 days. So definitely the negotiation is still in progress between US and Iran. But what the Trump really want is the Iran to end their nuclear program. So whether this will happen, this will be seen. And over the last week, market also were excited with the SpaceX going to be IPO, right? Right now, SpaceX is looking to raise about 75 billion, right? And now, one thing is that the market is still have a very strong liquidity because during the February, right, OpenAI managed to raise 122 billion on their latest funding that value OpenAI 852 billion. Hence, SpaceX of 75 billion fundraise on the IPO should able to achieve, right? So the according to the news, the date is somewhere in the month of June, right? And so after the SpaceX second counters that would be on the IPO pipeline would be the OpenAI, and then these are the two companies that the market is looking at for the second half of the year. Now, due to the US and Iran finalizing on their deal, right, the crude oil have reacted negatively. This morning, the US futures have gapped down and heading towards $90 level. But today, Monday, US is closed. The futures market is still ongoing, but the settlement only happened on tomorrow, Tuesday. Let's see by the time of Tuesday's closing whether the $90 will be remains intact. If breach, then on the technical setup, bullish technical setup will be negated. Meanwhile, the gold have also a rebound. You can see that at this juncture, 4,005 have been a very strong support for the gold. On the upside, the gold has to cross the 20 and 50 days moving average to have a meaningful upside movement towards 4850. At the equities market, E-minis and S&P 500 continue to move on higher high, right? As the S&P 500 right now is testing the 7,500 level. Breakout here will open door towards 7,750 and 8,000 point level, right? And so the market is closed today. It will resume on tomorrow, Tuesday. Meanwhile, for the Malaysia market, there is an early sign of weakness in the technical setup as on the weekly candlestick. Right now, it has fall below the 20-week SMA line, right? So the sentiment have become cautious on our top 30 counters, right? If these corrections were to continue, right, the FBM KLCI will pull back towards 1685. Right now, over the week, technology is still the most bullish sector. Now, it has been recording weekly gains for the 8 consecutive weeks. Right, follow behind is utilities and industrial. And last week, consumer REIT and telecommunications have a very strong selling pressure. So FKLI will still keep bullish bias despite that it's underwent a corrections right now. we set our stop loss point at 1690, right? Then on CPO, right, have a mild rebound on the Friday, right? On the upside, 50 days moving average remains as the resistance for the FCPO right now. We set our stop loss on this bearish technical setup at 4007. On the trading stock this morning, firstly, we look at press metal, eyeing to break past 9 ringgit and 15 cents. Next level will be 9 ringgit 45 and followed by 9 ringgit and 75. Downside support is 8 ringgit 85. And then on Franken have break past the 4 ringgit 85 cents. R1 would be at 510 and followed by R2 at 5 ringgit and 35. Downside support is 4 ringgit and 60 cents. So we have one pending breakout press metal and one breakout stock Franken. So I'll stop here and pass on to Yong on the weekly economics report. Thank you.
Thank you, Joseph. Let me share my screen. So, morning everyone. Thanks for joining the call. Our sentiment index continue to move higher despite that there's a marginal saw up rise. So currently we still see the US equity may enter this week with sidelines with a risk sentiment index like slightly showing some downside bias. So our short-term call last week to sell the asset has played out quite well, with the Nasdaq declining almost 3% from its peak, and also S&P 500 falling about 2% over the same period. So we'll continue to follow what the recent bank is telling us to see what the print coming will tell us. So other than that, there also a release of FOMC minutes last week. So we see three key observations. First, many participants from the committee wanted to drop the easing bias from a statement. Secondly, majority said that firming will be likely appropriate if inflation say persistent early above 2%, and many participants say it would be more appropriate to lower the rates if inflation is in line with expectations. So officials telling us that penciling inflation will slow down in the first half of this year and closer to 2% by end of next year. So currently pricing still remain a slight bias toward hiking, with the Fed future pricing around 0.8 high in the end of December. So currently this is again our view of one cut for now. Next will not be a systemic risk. So currently we see the hantavirus has reported and surfaced in Singapore and Indonesia. So Thailand has declared it as a systematic concern, and also Malaysia has tightened border controls. So this episode serves a reminder of us like what is a health shock impact on the macroeconomy. So during COVID-19, global GDP has contracted almost 3 to 4% in 2020. So moving forward, we also have some release in the economic data, especially on the labor side. So global growth has seeing some moderations, especially in Australia, where the employment has risen to 4.5%, which is the highest since 2021. And also, the UK has been shredding 100,000 payroll jobs in April versus the consensus estimates of only 10K. So, other than that, looking over Asia, China has also remained sluggish, with retail sales slowing to 0.2% year-on-year, while fixed asset investment has contracted 1.6% year-on-year. Other than that, government spending of the country also has been falling very slow to 7.3%, which is the sharpest decline in the 6-month period. I think that's all from me. I'll be happy to pass on to the next speaker. Thank you.
Hi, yep, morning everyone. Thank you. Yep, so we have a results preview on press metal. We maintained by with unchanged TP of 10 ringgit and 50 cent. Yep, so press metal is slated to post its results this Thursday. We are expecting core Patami to come in between 650 to 720 million. So this implies 5% to 15% higher Q on Q. So aluminum prices are higher 16% Q on Q, which is about 3.2 $2,000 per ton, and MJP premium also doubled Q on Q. So expect a strong set of numbers, but also do note that first Q is historically the weakest quarter. Quarter to date, the average aluminum prices is now about 3.6 thousand, which is 13% higher Q on Q. So this point to yet another strong set of numbers in second quarter of FY26. Yeah, but overall, the market has started to price in the deficit for aluminum coming from Middle East. And as we can see, the market is now looking at between 2 to 3 million tons deficit for this year versus 600,000 tons deficit pre-Middle East conflict. Yeah, so as such, we maintain our TP of 10 ringgit and 50 cent. Our TP implies a 27 times FY27 PE, which we think is justified given the current elevated aluminum prices, which will be the new normal for the stock. Yeah, so I'll stop here and I'll pass on to the next speaker. Thank you.
Yep. Thanks, Iftaar. Hi, morning, everyone. So we have a results note for Alliance Bank. The fourth quarter numbers was actually pretty decent. It was down 4% Q on Q, but up 4% year on year to bring the full year financial year FY26 net profit to 827 million ringgit, or up 10% year on year. This formed 103% of our, as well as 104% of consensus estimates. The results highlight the year-on-year net profit growth was really coming from higher operating income, where you see a combination of healthy loan growth helped drive net interest income, whereas non-interest income was also higher. There was some favorable mark-to-market gains, as well as the forex income. These were partly offset by a higher credit cost of 12 basis points in the fourth quarter of this financial year versus 6 basis points a year ago. From the balance sheet perspective, we had loan growth expanding of about 7.5%. We also had some pretty decent deposit growth. And although you look at the headline gross impaired loan ratio of 1.72%, this appears to have improved. Loan loss coverage is also improving to 113% from 109% a quarter ago. I think what investors are going to watch out for is that there were actually notable upticks in this day past due classification of several portfolios, such as your SME, personal financing, as well as the Alliance One account. Now, if this day past due deteriorates further, that means that, higher credit costs is going to be required. But for now, management thinks this is under control, and they're not expecting a large migration into NPLs at this stage. For FY27, the outlook, they are guiding for an ROE of 10 to 10.5%. This is on expectations that the crude oil price will not average at more than $120 per barrel for more than 6 months. The early signs of their upcoming first quarter FY27 numbers is that, the numbers are actually tracking the guidance that they have provided. Other than that, they are also guiding for 30 to 40 bips uplift from this upcoming new Basel III requirements. But, Alliance Bank, as previously mentioned, they would rather preserve their capital for growth. We have raised our FY27 and 28 PATMI by about 4% each, respectively, on account of higher non-II. But, after updating also for the full year results and the balance sheet parameters, our target price has been tweaked down to 5 ringgit 20 cent from 5 ringgit 40 cent. There is no change to our neutral call on the stock. Okay, that's it from us today. Thank you for joining us. Happy trading, and see you again tomorrow at 8 a.m. in the RHB morning kappa at 8. Thanks, and have a good day, everyone.